Tactically, you're also bullish on PSU banks.
Yes.
For someone who is risk averse, for someone who believes in predicting cash flows,
Right.
PSU banks have a horrible balance sheet.
Yes, I agree. But at the same time, when it comes to safety, they are owned by Government of India. So that is the reason why I'm quite confident that they will never go bust.
What about NPAs? You know, there's always a belief that the man at the top keeps on changing, and none of the PSU banks or PSU companies are ever committed to create shareholder value.
As far as the man at the top keeping on changing, I think that's the safety net. Because what happens is that when a new chairman comes in, if there have been any excesses in the past, they are cleaned up. So to that extent, I think it's a safety net for PSU banks. Having said that, the second is that the opportunity is so enormous and the reach of PSU banks is so much higher than most of the other private sector banks, probably barring HDFC, that or even ICICI Bank for that matter. But the opportunity is so huge, and especially in rural India, the opportunity could be so huge that I don't think that whatever they do, whatever mistakes they commit, the kind of growth which they can show over a longer period of time could be fantastic, and that is the reason why I'm bullish on it.
But if I simply put 2 and 2 together here, in 2001, State Bank of India was at 200 rupees.
Correct.
Today it is at 2000 rupees.
Correct.
HDFC Bank was at 100 rupees. Today, come bonus, come stock split, it is at about 5,000 rupees.
Correct.
So it's PSU banks have not created that much of wealth.
No, I completely agree with you. I'm not saying that they have definitely not created wealth, but not created wealth in the sense not created wealth to the extent that HDFC Bank has created.
So why go for PSU banks then?
No, it's not that. What I'm saying is that going forward, PSU banks are, in terms of price to book, even for after adjusting for NPS, some of them definitely have value. When I'm talking of PSU banks, I'm not talking of them as a group. It is possible that a couple of them, maybe someone like a Bank of Baroda, I would say, which is a bank which I like. So there would be only 1 or 2 banks where I would invest.
Why do you like Bank of Baroda? What is so special about it?
No, I think over the last 4 or 5 years, what we have seen, or slightly longer, maybe 7 or 8 years, what we have seen is that relatively the kind of NPS which come out of Bank of Baroda are significantly lower than most of the other banks. They have been system-driven NPA recognition for a longer period of time, and there has been a consistency in the way management has been, driving the bank going forward. So that is the reason why we think Bank of Baroda probably is a good bank to invest in amongst the PSU banks over a longer period of time.
As a theme, you are extremely bullish on food.
Yes.
So what's the best way to bet on food?
Obviously, the best way to bet on food is to look at a company which is into food. So it could be a Nestle, which I think is very, very expensive.
Wildly expensive.
Yeah. So as of now, I wouldn't talk of that. But Britannia again could be an interesting pick to look at. Another one which is restaurants. I like restaurants as well. Though there are no listed companies in restaurant, there is only one which listed recently, which is specialty restaurants, which also could be an interesting company to look at.
Restaurant inherently is a high capex business.
Yes.
The minute you grow, you need real estate.
Correct.
When you grow, you need more logistics or more logistics management.
Yes.
So why do you like a business which is dependent on more and more cash inflow?
To some extent, it is similar to the retail business, the food and grocery business which we talked about. Typically, say for example, specialty restaurants. I think it's currently at around 84 restaurants. So for it to move from 84 restaurants to maybe 100 and to add another 50 restaurants, they don't need any additional inflow of money for them. They don't need any debt to be raised because they have already raised equity. Going forward, the kind of cash generation which will be there in the existing restaurants will be sufficient for their future growth.
What about competition?
There would be competition. See, what I'm looking at is that the overall opportunity is so huge that another 10 companies coming in, it won't matter really. So they will continue to grow. There would be adequate space for other 9 companies also to grow.
So broadly, your thesis is focus on a business or a company where the opportunity is infinite.
That's right. I mean, in the foreseeable future.
But I don't see that for Bata.
Why not?
Shoe market is
Why not?
it's not a super growing market.
See, it's a necessity. It's a necessity. As far as Bata is concerned, I mean, there were earlier also a lot of apprehensions on Bata saying what happens if Reebok comes in, what happens if Nike comes in, which is fine. I mean, but the thing is that Bata is a generic brand in India. It's like Colgate, wherein you go to any shoe shop, at least maybe 5 or 10 years back, you would see a Bata written on it. So when you are going to a Bata shop, you know why you are going to a Bata.
The stock was 300 rupees 2 years ago. Now it's at 900. It's
Yes.
already been at 3x, and you still like it.
Yes, I do like it.
You're confident that the company will grow in the range of about 15 to 20% for next 5 years?
That's right. That's right.
So what really is your thinking behind Bata apart from growth? Do you like the brand? Do you like the location of the stores?
No, what I like about Bata is basically, yes, as you rightly said, it's a brand, because when someone goes to Bata store, he knows why he is going there. So it's very simple. He goes there to buy shoes. In case of Bata, also what happens is that if a particular store doesn't work for maybe 4 to 6 months, they close down the stores, because they know that if a Bata store doesn't work, in 6 months' time, there is no need of a Bata store in that area. So as far as Bata is concerned, the growth is very easily possible, because even now in rural India, no one is going to go and buy a Reebok. So people are going to buy Bata shoes, or for that matter, any generic brand.
Which is one stock you own from last 10 years, and you have no intentions of selling that for the next 10 years?
Titan. Trent predominantly, you could say.
What about Titan? Then let's talk about the valuations. The valuations of Titan.
Titan is not cheap any longer. But having said that, again, I think their jewelry business could show some signs of slowing down in probably next 1 year, and it's more due to a stagnation in gold rather than anything. But over a longer period, I think jewelry business will continue to do well.
Over the years I've known you, you've always been a big advocate when it comes to pharma.
Yeah.
Now within the pharma space, what do you like and why do you like?
There's one stock which probably most of the market has been disappointed with, which is Biocon. To some extent, I have also been disappointed, especially after the Pfizer deal was cancelled, because that I thought was a good sort of cornerstone for them for growth going forward. But having said that, that is one company which has made a name for itself in biosimilars. And any pharma company, why I like pharma companies, they have got 3 legs to the business. One is the India business, second is exports, and third is, of course, if they can do any contract research or contract manufacturing. And Biocon has all 3. So that is the reason why I like Biocon. And I'm sure that, the loss which they have, not loss, but the opportunity lost, which has been because of the loss of Pfizer deal, I think they will be able to make up somehow. You have 2 daughters. So as a father, how have you invested for them, and how are you planning to invest for them? Stocks, of course. That is definite. In fact, I always argued with my wife that, instead of, because she insisted that I invest in gold, and I always insisted that stocks are far better than gold. Who got it right? Because gold is at an all-time high. Well, I still got it right. I still got it right. For simple reason that, gold typically moves in spurts and then it stagnates. Whereas if you are invested in good stocks, as I said, that stock market from 1980-81 to 2010 has gone up 90 times. Gold hasn't. So if you are bearish on gold, why are you bullish on Titan? No, Titan gold is passed through. Okay. Last couple of years they have made money because of the price increase in gold, because if your total sales value goes up, if gold prices come down, turnover will also contract. Turnover will contract, but their margins will continue to remain same. So that is why. We've been stock specific. Before we wrap the show, a disclosure from you. Well, I virtually own most of the stocks which we have discussed. In fact, all the stocks which we have discussed. And we would also be holding many of these stocks in our portfolio management scheme, as well as our directors and employees would be holding those stocks. Milind, great to have you on ET Now. Thank you so much for your time. Thank you so much, Nikunj. And certainly we'll see more of you going forward. That I don't know. That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.